We've got another hot one for you here today. We were waiting on it. Talking about Cloudera. Now, what does Cloudera have to offer for me, okay? Well, let's just say the stock's down 11% after hours. Kind of bonkers. Clearly after reporting earnings. We're going to take a look at these earnings and see why in the world this stock is down 11 whole percentage points. That's quite a bit. Quite a bit. So, overall, we'll take a look. It is fair to say, obviously we love talking about it. Over the last year, the stock's seen some relatively good treatment, up 86%. I've enjoyed the ride the whole way, no doubt. But again, an 11% pullback today, pretty rough. You'd expect a bad earnings to cause this, but we'll see. Non-GAAP EPS of 15 cents beats by 4 cents, and a GAAP EPS of negative 18 cents is a miss by 10 cents. So it is a miss overall on a profitability standpoint. So I get that. From a revenue perspective, $226.56 million, up 7% year over year, beats by 5.3 million or 5.13 million. Overall, it's a good revenue line there for what they were expected. Not bad at all. Not a blow out of the water quarter, but heck, I'll take an increase any day. Adjusted income from operations at 50.5 million. Operating cash flow at 36.7 compared to negative 9.4 of a year ago. So you see the improvement there as well. Total revenue again up 7%. Subscription sales increased 14%, and that's obviously where the majority of the business is being done. 206 million out of the 226 million. Obviously, being around 90% of that comes straight from subscription models. So that's what's pretty important there. For quarter one, they are expecting a revenue of 216 to 218, below the consensus of 226 million, and an EPS of 7 to 9 cents, topping the consensus of 2 cents. Subscription revenue should come between 195 and 197. So I think we see part of our issue here. This market right now, you got to beat on all cylinders. All cylinders. That includes typically the trifecta for earnings. You're going to be looking at overall, obviously, EPS line. You're going to be looking at revenue, and you're going to be looking at the guidance. Because if you miss on one of those, honestly, this could be a rough time for your stock, okay? It could. That's just the volatile market in which we trade. Definitely disappointing. The full year guidance, 907 to 927 million, below the consensus of 945, and EPS of 35 to 39 cents is below the consensus of 48. So overall, it's expected to be a down year here. Really, it is growth, but it's expected to be a less than what the analysts might have expected in terms of a year for them. So I think I get why the stock's down, maybe by a little bit too much in my opinion, but we'll see. Annualized recurring revenue grew 10% year over year. They increased about 10% of their customer base. Pretty nice there. You love to see that. Average recurring revenue from customers migrating to CDP came in at 60 million. Good stuff. Overall quarterly numbers here. GAAP loss from operations was 51.6. But that includes a $35.8 million charge for right of use and other lease-related and that compares to a loss of $64.4 million in the fourth quarter of last year. So there is improvement there. Would be more of an improvement if not for that charge for sure. So need to put that into consideration. Non-GAAP income came in at $50.5 million compared to $11 million of the fourth quarter last year. So again, that's without that charge. Quite a bit more significant in terms of that. So good improvement there, all things considered. Very much improvement there. So we like to see that for the full year. Revenue came in at $869 million, increased 9% year over year for the full year. Subscription revenue increased 17%. So again, they're going away from traditional revenue sources, going a lot more to focused on subscription base. You can see as a higher percentage growth there. GAAP loss for the full year came in at $156.3 million. And that compares to $339 million of the year a year ago. So overall, we're talking about a company that decreased their loss by half this year, and it's not a significant amount there, all things considered. So you should see a trend to where they likely reach profitability within the next 2 years, in my opinion. So that's something you need to consider if you're invested in this company. Recent business highlights here: annualized recurring revenue coming in at 778 million is nice. 10% growth year over year. Again, that's going to be subscription based there. Subscription margin for the quarter was 87%. So again, these tech companies here have the ability to have such high margins. It's just a matter of controlling expenses that really leads to this for sure. So pretty nice. It is good to see that overall. They repurchased 26 million shares over the last quarter, so that's pretty significant there. Obviously, CDP Operation Database is now available on AWS and Microsoft Azure. Good to see yourself on those platforms. You do like that. They've partnered with NVIDIA to accelerate processing for enterprise data engineering and data science workflows on Cloudera data platform, CDP. So there's a lot going on for this company. We saw the guidance here. Not that exciting. I mean, come on now. Shoot. You wish it wasn't this way. I'd like a better outlook. I really would. I would like a better outlook. So I mean, I get what's going on here. Why that would be the case. We'll look at the balance sheet here with this company. Pretty small font. I can't lie. Let me see if I can just give a little zoom for you. I'll zoom for you folks. Overall, I get a year-over-year comparison here, which I like. I like that. Total current assets right now coming in at $1 billion, right around $1 billion, a little bit less than that. Compares to right around $710 million of the year prior. So growth by around $300 million there, mostly due to an increase in cash and cash equivalents. What a shocker! They raised capital. Total assets in general at $2.5 billion. Compared to $2.3 billion. Again, just because current assets really growing there. Total current liabilities at $663 compared to $579. So they increased by current assets by quite a bit more. But overall, total liabilities in general came in at $1.3 billion compared to $861. So overall, we saw a massive increase of this long-term debt line, $487 million here. In raised capital. So you need to consider that, obviously, because stockholder equity did fall, not by a crazy margin here, but $1.1 billion here compared to $1.4 billion. So there was a decrease there in stockholder equity, not by a significant margin, personally, in my opinion. Balance sheet, I think, could use some improvement in terms of just overall size. I think we could improve the balance sheet in terms of what they have in assets. But overall, not bad. Not a bad balance sheet for a company, obviously, with net negative cash in terms of a GAAP perspective. So not all that bad when you look at that. So you look at the company again. We're talking about $860 million in revenue, trading at a market cap of $4.6 billion. It's not an incredibly steep valuation. We're talking about really 5 times that value there. Which is not that bad, all things considered, for a company that's showing some decent growth. Obviously, disappointing results in terms of that guidance line, but I think at $13, this stock's still a steal, okay? It was definitely a huge steal when it was under $10, but I do think under, or really anywhere under $14 is frankly a steal for this company in the long term, because I believe once this company gets to a point of profitability, you're seeing the partnerships they're making, you're seeing what they're able to do. It's not like an incredible growth platform, but this is a company that's going to be able to consistently churn out good numbers, good revenue numbers that are growing year over year, and that there's a lot to be said for that. Extremely volatile ones that grow at significant rates, not always the most exciting. Because if you're like me, you like a little stability in your life. I've got some that are wild stocks. I've got some that are more stable. So that's what I got for you today. overall, hope you have a fantastic day and enjoy.